Hi everyone, I'm going to make a video on the SPX trade that was opened at approximately 11 o'clock p.m. Pacific time, 2 o'clock, 11 o'clock a.m. Pacific time, 2 o'clock p.m. Eastern time, and it was off of this this candle right here. And the main idea is that if there's like a long and hard candle like this or this, there's always a chance at the end of the day, especially with power hour rallies, when the conditions are right. I think at the open, the trend, let me just check, the trend for the day was, it actually opened at around 0.8 and just remained there for the whole entire day, and then it ran up to 1. So that's when it started to sell off heavy. And then at around 11 o'clock, this was literally like a full red candle right at the time the trend hit 1.11, I believe. So the trend hit 1.11 at exactly 2 o'clock p.m. Eastern time. Okay. So like when the trend spikes, it's usually an indication that there's there's a lot of selling. The volume on the sell side has been exhausted, especially if that's the spike of the day. So sometimes if you see like a trend that hits like 5 or 3, that's kind of indicating that the sellers have exhausted the day and there's no more selling left. And that's what kind of happened at 2 o'clock. Not only that, we also, if you follow the futures, there was another futures gap that got filled at 3,820. I can't remember which gap I was talking about. Let me just take a look at my notes. The notes in the trading room, trading alerts, indicated a gap at 3,855. Okay, so right around here, that's when the market started to sell off and do the bearish engulfing. It took out the gap right there at 355, but then you would not, I don't think you'd really know that it would have gone all the way down to 3,794. That's really tough to call, right? So what you would do is that once I knew that the 3,855 gap got filled, some of my orders got filled as well, my stink bids. But then after that, like you're just kind of watching the day, and then knowing that the trend was really low, you know that there's like a power hour rally opportunity, right? At around 11 or 12. So 12 o'clock is actually the definition of power hour rally. But the day was selling off so hard from the morning till 2 o'clock that it literally exhausted the sellers. And then that's when the opportunity presented itself. So when I moved down to the 5-minute time frame, what happened was, here's the selling that was relentless all day, right? And one good candlestick pattern that's really effective in without using any technical analysis is this one right here. When you tweezer bottoms, they call it tweezer bottoms, or you just call it, it's just a bearish bullish engulfing candle. It's just basically when you get this large red candle, and then the subsequent candle just engulfs the whole entire. So you wouldn't be able to catch this candle's low. It's virtually impossible. Like just catching any low is to second decimal place is impossible. But so you just need to kind of recognize that candlestick and know that there is a potential setup. So once I saw that, I actually then noticed that this cumulative delta Bollinger Band, which plots the volume, okay, it's a free indicator. It models the volume, okay, and basically it models the volume on the bid and ask, and this was contracting, okay. So it was contracting already from the open, and then as it was expanding, it was kept on expanding lower and lower and lower, and filling the gap at 3,855. But then when this candlestick pair appeared, then I started looking at the volume, and then I noticed that it was already contracting, which is a good sign, because once it starts contracting, there is a time where there's a period where it could expand. And obviously with the power hour rally, I don't think there was any more room for selling, right? The sellers were pretty much done for the day. And then when I look at actually the ticks, we have the indicator called cum ticks. And actually, if you take a look at the cum ticks on the 3-minute time frame, or maybe the 10-minute time frame, you can actually see the transition. Let me see if I can plot it here. So on the cum ticks, I'm gonna plot, copy paste it right onto this chart right here. There it is. Right there, that's 2 o'clock, okay, p.m. Eastern time. That coincides with this, the candlestick pairs here, okay, and that's a significant transition point, because inflection point, because you can see the relentless selling. Like the outer edge color was red, and it was red all day with the trend being extremely low. So the trend was giving us heads up that there's going to be a power hour rally. And then, but it can't power hour rally until this red outer edge turns green, right? So it turned green at exactly 2 o'clock. So actually, if you take a look at my alert, and sometimes I post the alerts in the main room by accident, but where is it? Yeah, right here. You can see that this was, okay, so it's 9 o'clock p.m. Pacific time, so it's already the 23rd on the East Coast. So you can see that that was at 1:54 p.m. Eastern time. So I have computers running here on Eastern time because I'm running systems here. So the alert was sent out to get 10 SPX calls. That's 0 DTE, which I rarely take, and that's 1.25. Those actually moved up to $16. Okay, I had 10, so I mean I left a lot of money on the table, as you can see. I actually left 2 as runners, and I decided, like, I don't know. Usually I should have just left those 2, right? Because those 2 would end up becoming worth 3,000. But that was if I were able to hold these 10 contracts, which is just $1,250, which, I mean, if you think about it, it's not that much relative to the reward. That was a $16,000 win right there, right? So going back to the chart, that cum ticks right there was the inflection point that captured this behavior, okay? And that's 2 hours before the power hour rally. And then the cumulative delta, the Bollinger Bands here, were already contracting, and that would display a TTM squeeze, not only in the 5-minute, but I used the 3-minute. So the 3-minute was also showing right here at around 2 o'clock, a TTM squeeze started to form with the Darvish channel. So that was like the time that I was actually looking to get into the trade, because of that TTM squeeze. And you can see that the TTM squeeze, once you're in it, it moved up and then it moved down. And the premiums actually, when I got in at 1.25, it actually went down to 0.95. Okay, so you could have even, I think even down to like 0.9. I don't know if you would have got filled there, but even went lower. And then usually, like after 3 green dots, 1, 2, 3, you would just take profit, right? But then I didn't expect the power hour rally to be happening at that time, so I took the profit. But had I held on to them, they moved all the way up to 3,846, which would be approximately on the SPX 3,820. Okay, so that, and then you can see these moving averages. Even though these moving averages are not significant moving averages, meaning that they're not the daily moving averages, you can still use these moving averages as intermediate target. Okay, so once it reaches the white moving average, which is the 50, then you can look forward to the purple one, and then you can kind of see if the bull flags are going to continue to trend with the green dots and the yellow as it continues to trend with the moving averages moving in sync, in parallel with each other, all the way up to the largest target, which is your largest risk and reward, right? That's the 10 to 15x, all the way up to 3,000. And you don't have to use the SPX, right? The SPX and the S&P, SPX and the E-minis are just a difference of 20. So as long as you got the setup and you can see where it's going, then you don't really have to do. You can do the conversion later, right? But the idea here is just to know that that was the setup. So if I look at this SPX. See, the SPX showed a similar setup, but the TTN squeeze was not as pronounced, right? And then the volume, it did contract, right? You have contraction here, and volume started to increase. So it is, and there's a gap right there, 3,781. So that's probably going to get filled tomorrow, right? Who knows? Those gaps they're everywhere, and there's all these other gaps above and below it. So yeah, that's pretty much it. That's how I got into the trade, and it was basically, you got this red long and hard green candle with a trend of 0.8, meaning that there is a power hour rally that is expected at least an hour before the market close, right? It can happen anytime. I don't think it's going to happen like sometimes the power hour rally happen really late, but it happens usually if you want to be aware when you get a big red candle and then you get the trend, when you get the ticks transition from a red gradient to a green gradient, that's when you should start to look into those power hour rallies. Okay, thank you very much and have a great day.